EMP stock. Okay, oh wait, hold on. This isn't. Yeah, this says Energy Mississippi. Let me check again. Yeah, I'm not getting anything with EMP. Evolution Petroleum. Okay, let me check again. Okay, let me see here. Okay, Evolution Petroleum. Oh, here it is. EPM. EPM. Okay, and maybe you said EPM and I missed it. I'm sorry. All right. So Evolution Petroleum. It's a small company. I don't like it. It doesn't. It's down this year, which is a risk factor. Unless you have a specific relationship with the company or a specific reason to own it, I think there's better ways to play energy. It's okay, Karen. Don't worry. Okay. So I'm not going crazy. Thank you for fixing that for me or letting me know it wasn't me because I was worried. You know what happened yesterday? Something weird happened. I hope I didn't have like a senior moment because I'm not a senior yet. But I literally was sitting there and I was talking to one of the people on my team, and they said something about 2026, and and then they mentioned 2025, and I was like, yeah, 2025, that was last year. I was thinking that in my head, like, oh yes, 2026 now. I can't believe 2025 is gone. And then I was like, wait a minute, it's not 2026, it's 2025. Holy crap. And I think what happened was I think it's because as you get older, the time goes by so fast that you just assume that you're going to be behind. You know what I mean? Like you see the 12-year-old and they're still in middle school, but you're like, "Oh yeah, you're probably in college by now," because you're so used to just everything going by so fast. So I just overestimate. Like I see the baby and they're like and I'm like, "Oh, okay, yeah, how's high school?" And they're like, "No, he's still in the 5th grade." Oh, I was just assuming that he's probably that 5 years went by in the amount of time that I thought 1 year would go by. I really would think that way. And by the way, speaking of that, there was one kid named Caleb. I can't remember his last name, but I liked him. He does a lot of financial literacy stuff for kids. He's a real smart kid, and he works real closely with his father. And I saw him at InvestFest, and I was sitting in the corner. It was really dark. I didn't think anybody saw me, and he saw me, and he came over and said hi. And he was a freshman in high school, and I said, "Hey man, how you doing?" I hadn't seen him since he was like 8 or 9 years old. And I said, oh, you're 14. I said, oh, that's great. Our daughter's 14. You're starting high school. And you know what he said? He said, I've already graduated. This kid had already finished high school, and so it is like they were going straight to the pros. He was already making hundreds of thousands, if not over $1 million a year, and so his dad came up, and I was super proud of him. And I can just tell you that just those really great parents and that strong father figure means so much for little boys. So I was really proud of him. All right, so Ricardo, why is it better not sell in a booming market and rebuy shares at a discount? Uh, okay. Yeah. Well, the hard part about that, Ricardo, is because it comes down to what they call market timing. Market timing is something even the experts can't do. So let's say that you see the market's booming. Everybody knows the market's booming. This is not a secret. Well, if you know the market's booming, well, why not sell everything and just wait until everything crashes? Well, the problem is that you don't know what part of the boom you're in, right? And so let's say that you see a stock at $100 and you say, "Oh man, that stock used to be $50. I'm not buying it at 100. I'm gonna wait till it comes back down." So you're sitting on the sideline, and let's say the stock goes to 120, 130, 140, 150, 180, 200, right? And then let's say it goes from 200 down, and then the crash happens and it drops from 200 to 170. And so you say, now I'm going to buy it. It's down 20, 30%. But you missed 100 up to 170. Do you see the difference? I mean, you were thinking that you were going to get a discount on the 100, but you didn't. You got a discount on the 200. So what's better to get a discount on or to pay regular price for something that is cheap or to get a discount on something that is expensive? Does that make sense? Like they have these department stores where they say, I don't know, they'll have a pair of jeans that are $50 and they'll say, well, just increase the price to 100 and then give them a 20% discount, right? So really investors that know the market really well, they say, yeah, this market's overpriced, but I got to stay in it because if I miss out on whatever's left, I'm going to get in trouble. Now, if they knew that it was going to end right at that moment, then they would all get out immediately. It would just happen quickly. There was a guy who predicted accurately that the Chinese real estate market was going to crash. He predicted this in about 2014 because he went to China and he started seeing all these cities where they basically had overcapacity. The Chinese are notorious for creating overcapacity. So they have built all these cities where nobody even lives in the cities. And he said he couldn't believe it. And he said he came back and said, "Oh yeah, this market, as soon as this all gets revealed, this whole thing's going to just fall down like a house of cards." And so they bet against the Chinese economy. They shorted some stocks and whatever so they can make money when the market collapses. Well, the problem was that 1 year goes by, there's no collapse. 2 years go by, there's no collapse. 3 years go by, there's no collapse. Well, eventually they had to sell because the whole time the collapse was not happening, the prices kept going up and up and up. And if you know anything about short selling, that's you're losing money. Your creditors that have loaned you money to do the short sale are going to eventually do a margin call and force you to relinquish the whole position. So after he lost $1 billion for his company, they sold it. They rebought their position. They got out of it, and that was it. Well, 3 4 years later, the Chinese real estate market did crash. He was 100% right. The problem was that the challenge is that it's not about being right. It's about being right at the right time. That is notoriously difficult to do. I do not encourage you trying to do it. It's not for the faint of heart. And if you do it successfully, the research says it's probably because you got lucky. And that's just the best way I can describe that to you. All right, so I hope that helps. Maurice, hey Maurice, how you doing? What do you think about DCTH? DCTH. Haven't heard of that company. Let me see what I can find here. DCTH. Let's see here. Let's see what comes up. All right, I'm looking for it. Okay. All right, so DCTH. This company is. Hold on. Why is everything so freaking slow? I'll come back to this. Yeah, just remind me. Okay, here we go. Decalth Systems. It's an oncology company. Okay. All right. Okay, the stock has had a lot of fluctuations. A market cap of 400 million. So it's a small company. They're in the middle of a turnaround. They had a big earnings beat. Okay, so I wonder if the stock got on your radar because it took off, but maybe it didn't. Let me see. I just assume every stock has gone crazy lately since the market's been so ridiculous, but maybe not. Okay, look at wow, it's down. Okay, it's up 7% this month, but not dramatically. Um, I don't see it. I don't have any problem with it being part of a portfolio. I'm thinking that if you find a lot of analysts that are optimistic about the company, which they are, then that might be good enough reason to buy it. There are some analysts that predict the price will go as high as $24 a share, even though there's no guarantee of that. Um, yeah, I would just really realize biotech is kind of risky in general because you got that jump risk, that risk that the stock is going to jump around on you. Because a lot of these companies are in these situations where one clinical trial can make or break the whole situation for them. What percentage of gold should be in our portfolio, as Lauren? 5%, in my opinion. I'm not. I don't think you should have like a big chunk of gold. Dwayne, why doesn't SMR, the nuclear company, get the same respect as Oklo? Yeah, I think you asked that the other day. You know, I don't know. Let me look. I think SMR hasn't didn't SMR get some though? Like didn't I thought that stock also took off. Let me see. SMR last 6 months is up 192%. I mean, what more do you want, man? That's crazy. That's ridiculous. That's just wild. And also remember, they're not going to move the same time as Oklo because they're not doing the exact same thing. But it looks like they design and market small modular reactors. I don't know if that's exactly the same as Oklo, but there is an article in Yahoo Finance that says not nearly enough people are talking about SMR right now. Let's see here. I'm looking for, let's see. They're hoping they can change the nuclear power industry for the better by changing the way power plants are built. Not enough people are talking about this company or the nuclear technology change that it's helping to develop. The big problem, okay, with nuclear power is that nuclear power has a huge capital investment required. It takes a lot of time to build nuclear power. Nuclear reactors have so far been built, meaning that all the construction basically takes place where the reactor is going to be located. Okay, the projects have also been massive. It's not uncommon for nuclear reactor projects to be delayed and over budget. For example, the most recent nuclear power plant built in the U.S. by the regulated utility, the Southern Company, was 7 years late and cost 17 billion more than expected. Given the backdrop, it is understandable that another company building the same type of nuclear power plant at roughly the same time simply gave up when its project manager Westinghouse went bankrupt. Okay. New Scale is changing the game because they're going small. These reactors are built in a factory, creating a more uniform product that also benefits from the cost efficiencies offered by an assembly line manufacturing approach. They are small, so they can be easily transported to where they are needed, located more closely to population centers, and adverse events are expected to be easier to contain. In addition, by excluding the most modern technology, the safety of new scale SMR is expected to be higher than for older reactors. Um, yeah, I think with new scale, it's speculative. It's a very speculative stock. I bet you that their revenue is garbage, and that's okay though. As long as you just understand that there's some chance that if the financial apocalypse arrives and everything crashes, New Scale is going to be the first casualty in that crash. But if you are willing to hold a stock for 100 years, not 100 years, maybe more like five, then I could see where this could be a solid investment. And I think I had some in. I thought I had some in my portfolio, but I don't. So I just bought 30 shares just in case the world wakes up. And so here's the thing, right? So let me explain why I made that investment just now. I just bought those shares. I own $1,336 worth of New Scale Power. I bought those shares not because I know what's going to happen, but because I just want to be involved. I want to be connected, and tethered to it. Because you asked me a question that made me think. It's like, well, why isn't that stock getting the same attention as Oklo? And Lord Jesus, we saw what happened to Oklo. So I'm not really investing so much in the company. I'm really investing in people. I'm investing in the idea that perhaps at some point somebody's going to get on a Reddit thread and start saying, did everybody look at New Scale Power and the stock is going to take off? The challenge, though, the risk, and if that does happen, here's the first thing I'm gonna do is I'm gonna protect my gains, because I really believe that companies like this are ahead of their time. Their prices should not be as high as they are. Quantum computing stocks, Lord, that's way ahead of its time financially. And so when what happens, I think, is that when the market crashes and when things go bad, it's not that these companies don't still have value. What happens is that it's like if you run into a crisis in your life, you're not worried anymore about that project you were working on that was going to have benefits 5 years down the line. You got to handle the here and now. So financial consciousness shifts, your attention shifts, right? So you might be really committed to something you're trying to do, get done by the year 2035. But if your daughter's sick, you're only focused on the here and now. Do you understand? So if the economy gets sick, then you could see a lot of these long duration stocks, these companies that are big bets that are going to last for the next 15 years. You could see them losing value because we're focused on survival right now. We're focused on things like liquidity and cash flows, and that happened to all the content creation companies. I think right after the pandemic, for a long time, companies like Netflix and others that were doing what they were doing were able to go borrow massive amounts of money, spend insane amounts of money on content. All my friends that were in the movie industry were making films and getting ridiculous amounts of money. I had a meeting with Will Smith's brother around maybe around 20, what year was it? I want to say it was around like 2014. And he talked about how ridiculous the amount of money Netflix was offering his brother for movies, how big that amount was. And it was because these companies were allowed by Wall Street to borrow buckets of cash and dump it out there to make content, and they didn't care if they made a profit or not. Your stock price did not suffer. Well, in 2022, all that came to an end. They said no more funny business, no more nonsense, no more pie in the sky. We're going to make our money one day. We need our money today. So what happened was that the focus then became profitability and cash flow. So companies were no longer allowed to engage in the same strategy. They started to challenge Disney and punish their stock price, because if you remember when Disney entered into Netflix's territory, they were like, we're Disney. We can lose money from here to eternity as long as we have a reasonable path to profitability in the next 5 or 10 years. Not anymore. So ultimately, what can end up happening is the sentiment of investors can shift, and investors are the parents. We are the parents. We tell these companies what to do. So if these companies are, if the economy turns south, then investor mandates may shift. And what could shift is they could go to some of the hyperscalers in AI and say, look, we know you dropped 80 billion trying to build the next AI best, next great AI model. No more of that. No more of that. Keep our cash flow in house and be more conservative. And at that point, two things will happen. One, companies are going to do what they're told. Number two, you would see the economy dip, because the imbalance of your economy right now is that most of it's being driven by AI spending. Most of it's being driven by the hyperscalers. If they slow down, if you hear in the news that they're slowing down their AI spending, you might want to run or get some cover, build some shelter on that portfolio, because there could be a rainstorm coming. All right. Let's see here. Let's see. My quantum ETF is up. Therefore, I looked at several quantum companies. A lot of quantum companies are up over 100% this month. Do you know why? There's been some major players. Sworn I saw something where JP Morgan is making it. JP Morgan is a really great bank. I own that. I like that stock too. I'm gonna buy some more JP Morgan, because I'm a Jamie Dimon fan and all that stuff, and I just like the way they just do business. And they're heavy investors in AI, and they are heavy investors in quantum, if I'm not mistaken. And I think that stuff like that just really puts them ahead of the curve. I think they're real well positioned to benefit from the shifts that are occurring within fintech. And so let me buy some. I don't have a lot of extra cash sitting around, but I've just bought some shares of JP Morgan. Yeah, and I think that was a big part of it. Also, there are a lot of people that believe it's the next big frontier for sure. And so now, in terms of this month, I think the government. There's some stuff here I see that where the government's considering quantum computing to be really important, because we're trying to compete with China. So another thing you've been seeing, probably if you've been watching the news, is a lot of companies that make rare earth minerals are their stocks are taking off, right? And the reason is that if you look at publicly traded companies that make rare earth minerals, people are buying those stocks because they are wondering if this is going to be Trump's next target, because they see Trump fighting with China. They're fighting over rare earth minerals. So quite logically, people are trying to position in these stocks so that when Trump, if or when the Trump team comes in and says we want to nationalize this company so we can compete with China, they'll be able to benefit. And that was how a lot of you benefited from the Intel investment that we talked about. I still have my investment in Intel. I actually increased my stake because the investment has stages. It's like, okay, there's the announcement, and then and the cash infusion. Then there's like sort of the board meetings where they get together and they get customers for the company and get additional investors for the company and things like that. And so that's a play that I've seen people make. So to the point where these stocks are becoming almost like meme stocks. So USAR, which it looks like someone's asking about that. So yeah, so to answer the question about the quantum stuff, Maurice, I think it's related to government activity. The government's been sort of addressing quantum stuff as a competitive arena. Also, you have the JP Morgans that are investing in AI and quantum computing, things like that. Defense contractors are deeply interested in it. So a lot of money is sort of flowing in that direction. So, but a lot of quantum companies are definitely early stage. And so it's really, really risky. Anytime you hear about a company being early stage or pre-revenue, just know you're taking a chance by investing in that particular company. Oh, and the other thing too is it looks like there was a Nobel Prize win connected to quantum computing. So apparently then that drew some attention. Let me see here. The 2025 Nobel Prize in Physics was awarded to three scientists for their work in quantum mechanics, which directly underpins quantum computing. The prestigious awards brought mainstream attention to the field. Okay. All right. Yeah. So there we go. So there's some, and then also there's some tech giants that are deeply invested in quantum computing: Google, IBM, Microsoft, and Amazon. AI itself, it's already in the room. And then I see the big robot, the AI robot that's standing behind that. So like there's AI itself, there's the AI robot, and then behind the AI robot there is quantum computers, a big quantum monster. And when they all team up together, it's going to be a complete shit show of a planet. Like it's going to be a completely different world 30 years from now than what we have right now. And then in addition to that, the little side streets I see like crypto and fintech, right? Because AI and all that stuff and quantum and all that, it interferes with the flow of money. Everything comes back to money, right? So Robinhood is a nice company, fun company to be invested in because I think that they're deeply in tune with how AI and crypto and all that and fintech kind of all play together. And then in the middle of all that, that big sandwich of that big nasty reality sandwich is you've got human beings right in the middle, and some of us are just being crushed and swayed and slapped around and impacted. And so you got to protect your neck and protect your soul because the world is getting kind of weird. It's getting kind of heavy. But then again, I guess everybody felt that way in every generation. So maybe we're not any different. All right. So sorry to start daydreaming like that, but I'm just thinking about that. That's that. That Trump may make a move in rare earths, then USAR would be a great place to have money planted. So if you have some money and you're okay and you feel the need to be a little speculative with it, there's absolutely nothing wrong with getting positioned in USAR just in case that becomes a conversation topic. I'm looking here at. I forgot that I did own a quantum asset. Which one do I own? D Wave Quantum. And Lord Jesus, this thing's gone up 230%. I just realized that. Holy cow! These quantum stocks are just, oh my Lord. Yeah, actually, that's the best performer in my whole portfolio. I didn't know that. And then there's Oklo. Oklo's up 127% over the time that I've owned it. But actually, it's up more than that. But because I have it in another portfolio, and I'm looking at what else is in here that's done really well this year. This is 212%. Oh, Energy Fuels. I've owned that one for a while. Yeah, okay. I have more Oklo on this. IONQ. That's also another quantum company that is it's up 119%. Okay. URA, uranium. If you remember, we talked about that. I brought that to class because I was thinking about that from what I heard in a podcast. And so uranium is going up because of the energy shortage. You have an energy shortage. And there's a few other assets out there. So let me get back to your questions here. All right. Do you invest in GLD versus IAU and SPY versus VOO? Yeah, I tend to invest in GLD and SPY, IAU and VOO. Remember, there's more than one ways to skin the gold cat, so you don't have to necessarily pick any particular path. Just make sure you get diversification. That's what's really important, and that you get exposure to the things you want to get exposure to. Thank you, Amani, for sharing the information in there. I appreciate that. Kevin Carter. Oh yeah, you already asked about USAR. You guys are just all into USAR. How about we do a class project? Since everybody's talking about USAR, let's just have some fun. Let's buy some, man. Let's just if you got some extra bread, even if you got extra $2, buy $2 worth of USAR. It's $39. You can buy fractional shares. It's up a lot though. It's so that's just know that that's risky, man. I'm looking at this. Let me see. Everybody's into this rare earth thing, and I'm kind of excited. This is fun. I think it's fun to do this together because and this is what I just kind of want you to see is like investing can be fun. Like you don't have to. Everything doesn't have to be super scary and overly precise all the time. I mean, just why not? Why not jump in? Why not give it a try? But yeah, it's gone up a lot. Oh my goodness, it's gone up from it was as low as what $1. Now it's $39. No wonder everybody's talking about it. All right, so let's see. It's $39 a share. I'm not telling you to buy it. I'm telling you I'm gonna just buy some for fun. I'm not buying it because I think it's a great investment. I'm buying it just because I just want us to have something to talk about in case it goes up. So I'm gonna buy a few shares and I'm putting it in my portfolio. So now when you ask about USAR, It won't be how I won't ask how your investment is doing. I'll talk about how we're doing. So if it goes up, then we're going to make money and we can have a big party together. How about that? How's that? Oh, does that sound fun? All right, let's do it. All right, but again, not telling you to do it. If you're nervous, then don't do it because this stock is it could be a bleeder, right? So if you're nervous about it, maybe you buy like a half a share or one share, just whatever. But just know $39 for a stock that was once trading at $2 or $3 a share, very, very risky. But I can also guarantee you that if Trump steps in and says, I want more control of rare earth minerals, I can easily see that stock taking off. What is it? Rare earth companies have become the new meme stocks. They are pretty much what GameStop was back in the pandemic. So that gives you an idea of what's happening right now. Teresa, I asked a question last week and I recorded it so I can have it to remember. Good for you for later, but there was no sound. Oh no, are we allowed to screen record? Just want to know the do's and don'ts. Um, I think you can. I mean, I don't see why. I guess on your computer you could probably screen record. I'm not stopping you. I don't have a block or a filter or anything. I'm sorry that your question didn't get answered. Yeah, write it down. Bring it to class. I'll be happy to answer it. Let me see here. The company RR. I don't know RR. Sharif. Let me see. I'll answer Sharif's question. That'll be the last one we do for today. All right. So RR. Let's see what company that is. I know nothing about that. Um, that stock makes me think about like Reynolds Wrap. RJ Reynolds. I wonder if that's connected. All right, so let's see here. Okay, it's Rich Tech Robotics. Okay. I'm interested in robotics. Um, it's a very tiny company. Well, it's $1 billion market cap though. But I bet you it's because the stock has gone up like crazy. There we go, 229%. Yeah, and 841% in the last year. I can tell you, it doesn't look like this company makes very much money. So that's something to be concerned about. Um, and by the way, RR also Rolls Royce trades under that ticker in London, but I assume you're not talking about Rolls Royce. Yeah, Rich Tech Robotics. It's $1 billion market cap, but it's not $1 billion company. If that makes sense, the stock price is higher than what it's supposed to be. And let's see here. They're because they're in the high growth phase. They're making a lot of investments in R&D. That means they could have a cash flow issue. And but they do have a decent amount of cash and short term investments. Okay, good for them. Um, mm, I don't see much there. I think it's more like if you invested in Rich Tech Robotics as part of a broader objective of investing in robotics in general, that would make more sense to me. Automation in robotics is really growing. And if this company does make some sort of strategic partnership that elevates the value of the company, then that could be beneficial. But remember, their profitability is negative, which means that if that they're beholden to the bank. So if something goes wrong and the bank doesn't loan them the money they need, that could cause significant problems. And then also in robotics, there's something called execution risk, which is the risk that they can't pull off what they're claiming to be able to pull off. So ultimately, I would feel better if instead of just jumping into a robotics stock, I mean, you could do that as part of a broader strategy. I would lean more toward some sort of robotics ETF. If robotics is your jam, bots, that's one that I've held shares in. BOTZ, bots, is a robotics ETF. And what that does is that gives you ownership in lots of robotics companies. Another one is Robo. Robo is another robotics ETF. ARC has an autonomous technology and robotics ETF. ARKQ. So those are some areas you could put money that would allow you to get that exposure to a robot. So you got to ask, what is it about this one company that makes you want to take on all that extra risk of investing in that one company when you can invest in a bunch of companies that are in the same industry and not have to pick a winner. A big mistake, and we can end on this point, a big mistake that's made in investing is betting on the winner. Like you see an industry and you see that, oh yeah, this industry is going to be big. So you pick a company in that industry and you think it's a good investment because that company's in an industry that you know is going to dominate. The problem with that sort of analysis is that even though you could be 100% correct, you pick the right industry, everything turns out the way you expected. But what you don't understand sometimes is, and I'm not in any way insulting anyone's intelligence here, because anybody can fall for this, is that you made it hard on yourself because you're trying to pick the winner within that industry. Just because the industry grows doesn't mean every company in that industry succeeds. It's like if I go to war and I got an army, just because our army won the battle, that doesn't mean that every soldier is going to live. Do you understand? Like there are soldiers who go to war and their side wins and they still have a horrible experience. They still get killed or they get maimed or whatever, right? So ultimately, a good example is Warren Buffett did a great job. I did not know this. This blew my mind when he used this example. I like this guy. He said that in the 1950s, he said no, but he used the example with the automobile industry, and he said, and so let's go back further. He said, if you go back 100 years ago, um, and someone showed you the future, and they showed you that this new invention called the automobile is going to be everywhere. Everybody's going to have a car. It's going to be all they're going to be all over the place. Then you would say, wow, okay, I get it. If I want to get rich, if I want my family to have wealth, I should invest heavily in automobile companies. Well, he said the problem was in the I think the 1940s there were just hundreds, if not thousands, of companies making cars. Tons of them. I think Maytag made cars. I didn't know it. Did y'all know that? Did y'all know that Maytag literally used to make a car? Because everybody's like, oh yeah, cars are the next big thing. We're all going to make cars. Cars, right? And well, as you know, to this day, Maytag does not make cars. They realize that making cars is not their specialty. They make dishwashers and stuff. So basically, what would have happened is if you saw that automobiles are going to be big and you invested accordingly, and by picking one company, you would have probably been wrong. Why? Well, because you probably wouldn't have picked um, uh, you probably would. Okay, thank you, Amani. Thank you so much, Amani. I appreciate your help, and have a great day. So you probably wouldn't have picked Ford. You wouldn't have picked General Motors. You wouldn't have picked. You certainly would have picked like a Tesla or something. So you wouldn't have known which car company to pick. The better approach would be a mutual fund or an ETF, which tracks the whole industry. So as the industry evolves, that ETF grows. Okay. And the BOTS ETF, BOTZ, again, not invested advice, but I do own BOTS and it looks like it's made money, but almost everything's made money this year. It's hard not to make money this year. But I just bought some more shares because I actually want to have a deeper investment in robotics because I believe deeply that robotics is going to be really big. The URA, the uranium ETF, I like that a lot because I believe deeply in the energy shortage. COPX, that's a copper ETF. That's done pretty well. Looks like that one's up 43%. So I started to buy. I'm gonna buy more of that actually right now because copper is part of just this whole ecosystem in terms of energy that is going to be massive going forward. So I just bought a few more shares of that. And what else? Yeah, so there we go. So that's enough for today. All right, so it's great to talk to everybody. I hope you guys are doing well. I hope that you keep on making money, and I'm gonna go take me a nap because I think I'm actually getting a little bit sleepy. When it hits nap time, I start to talk slower because my brain starts slowing down. I've been up since 5:30 this morning. But here's a link, by the way, to the Black AI conference if you guys want to join us this week. It's blackaiconference.com, but there's the link right there, and use that code Black AI Enhanced, all one word, and it'll give you a big discount if you want to join and you want to network with all the other folks that are digging into AI. So we're learning AI together, we're learning stocks together. We're going to be doing some real estate stuff together. We're going to do another All Black National Convention digitally together. So we're just doing this together. So I hope you guys will join us and be a part of this community. And it's an honor to talk to you every single day. And God bless you and your family. I'll see you guys soon. Have a great day. Bye-bye. I'll leave the code in there. The code is black AI enhanced, Amani. So I'm gonna, Amani, I'm gonna shut off my